Okay, today we're talking about the income tax regime of South Africa. Really exciting stuff this, and it affects all individuals or persons who earn any gross income. Now, I like to break down these videos into topic sections, and today we'll be answering the following questions. Number one, the tax tables. I'm literally just going to show you the tax tables, okay? Number two, how to apply the tax tables. In case you've never applied the tax tables, tried to figure out income tax, I'm going to show you how to do that. Okay, let's talk about the tax tables. The tax tables are what we use to determine your income tax liability. Every person who earns an income and is a tax resident in South Africa must submit an income tax return for the period from 1 March to 28 or 29 Feb the following year. That time is called a tax period. And when we speak about the tax year, being for example, the 2025 tax year, it means that the year that started on 1 March 2024 and ended on 28 Feb 2025. So actually, the vast majority of the 2025 tax period, 10 months to be exact, is sitting in the 2024 calendar year. So later this year, during tax season, in about July or so, when you have to submit your income tax returns for the year, the 2025 tax year, that will be the period you submit for. And to be clear, while we are talking about income tax computations, most people as individuals don't have to worry about doing the calculations themselves. They receive a return already calculated and just need to double check that the numbers are accurate. Now, let's take a quick look at the latest tax tables. And you can see here from the SARS website that there have been no changes in the tax tables for the past 4 years. And you will have noticed this interesting feature here, which is that the tax tables are graduated, stepped. And that's what is called a progressive taxation system, meaning those who make the most money have the highest percentage of their income taxed. But we'll talk about the why of this a little bit later. For now, those are the tax tables. The last part of the tax tables that I want you to look at though is this section at the bottom of the same web page. There are these tax thresholds, meaning only those who make a salary above this threshold will be taxed. Okay, let's move into how to use the tax tables to calculate your income tax liability. When it comes to calculating your income tax, the concept is simple, but when you aren't familiar with it, it can seem a little daunting. Now, I've heard people talking about how much tax they pay by referencing their marginal tax rate, which is the tax rate that you pay on the last bit of your income. Notice how I said your last bit of income. That is because a person with a marginal tax rate of say 36% doesn't actually pay 36% on all their money made. Rather, the way it works is the money you make is broken up into buckets or steps. For this part, I think it's easier to make use of an example person. In this example, our guy Andile is making 650,000 Rand as his gross salary. This means that according to the tax tables, he will break down his income into the following buckets. The first 237,100 will be taxed at 18%. The next 133,399 will be taxed at 26%. Notice how from stage 1 and 2, we have the first 370,500 as per the tax tables. The next 142,300 Rand will be taxed at 31%. We now have accounted for the first 512,800 of his salary per the tax tables. And then lastly is the remaining salary of 650,000 Rand less 512,800 we have already accounted for. And this amount is 137,200 Rand. That last 137,200 is taxed at his marginal rate at 36%. This is because we have not made it to the next tax bracket of 673,000 Rand. which would have been taxed at 39%. Okay, so now that we have broken it down into the individual steps or the individual buckets, we can see that only the last little bit of his money is taxed fully at 36%. So then, if we are to calculate this man's tax for the 2025 year of assessment, by the way, a year of assessment means the same thing as a tax year in this case. But if we were to calculate his tax, then we would get 237,100 at 18% gives us 42,678 Rand. We put that away into a bucket and we'll add to that to see the final tax that he pays. Next we have the 133 Rand 400 taxed at 26% gives us 34,683. Put that away. Next, we have 142,300 Rand at 31%, which gives us 44,122. Put that away as well. And then finally, we have the last salary bracket of 137,200 Rand times the marginal rate of 36%, which gives us 49,392. And that ultimately gives us a tax for this man of 170,000 Rand 876. The other way to put this is that his take-home pay is 479,123. So, in effect, this man has paid tax at a total rate of 26%, which is very different to when we said his marginal tax rate is 36%. And notice how SARS has already calculated all the tax for all the brackets except the marginal one. They say here in the bracket that Andile is in that his tax is 121,475 plus 36% of the amount above 512,800. So we could have skipped doing all this math on all the steps and simply done the last step, adding the 49,392 to the 121,475 that SARS has already calculated for us. So when you're doing it yourself, find the bracket that your salary fits into, use the tax that SARS has calculated for you, and then just apply your marginal rate on the portion of your salary that fits within that tax bracket. But before you jump off, there's something else to bring up here. Remember when we scrolled down to the bottom of the page with the tax tables? We saw something called a tax threshold. And when we spoke about it, we said those who earn a salary at or below that value do not pay tax. Well, it's more than just those who earn below that threshold. It's really the first 95,750 Rand of everyone's income, which is tax-free. This applies to every person aged below 65, and anyone who is older than that gets a higher primary rebate. So called because the way you calculate tax, this is the first rebate you can claim. But then there are various other means to further reduce your taxes. We won't go into those methods today, but suffice it to say, the first way that SARS allows you to pay less tax is by applying this primary rebate. Now check here, there are two numbers. One is a tax threshold of 95,750 and the other is a primary rebate amount of 17,235. These two numbers are the same. The only difference is that the tax threshold has already had a tax of 18% applied to it, as you can see on your screen. So the way to get to Andile's final tax, assuming he has no other rebates, is by reducing his tax payable of 170,876 by the 17,235. So that we land at a final tax of 153,641, meaning that Andile gets to take home 496,000 Rand 358, and his effective tax rate is really only 23.6%. Doesn't sound too bad now, does it? Okay, great. I think we've covered everything, and that's about all I have for you today. If you appreciated this video, give it a like, share with a friend, and consider subscribing for more topics like this one. I've been Smonelo Mdambo, and I'll catch you on the next one.